Adam, I wonder if you could just put together a little bit of the pieces here. Is Silicon Valley all based on cheap money?
Well, Silicon Valley isn't typically the place where it pays much attention to Federal Reserve policy, but this era of low interest rates has contributed to easy availability of money that has spawned a lot of these multi-billion-dollar valuations that startups have been getting. A big question out here is if this is a bubble, is this not a bubble? But if it is, then what sort of event is it going to take to kind of shake things out? And one thing that keeps coming up is an interest rate increase, and what an added cost to the availability of money will do to the broader markets and by extension Silicon Valley.
Adam, based on your reporting, what have you found?
There's a few things. A main reason why people are paying attention to the Fed policy is the effect that it will have on hedge funds and mutual funds, which have uncharacteristically been pouring money into a lot of late-stage startups. And according to different people I've talked to, if interest rates grow up, these are the sorts of groups, hedge funds and mutual funds, could move that money into different asset classes, whether it's fixed income or blue chip stocks. There'll just be other things that will become more attractive. Startups have been one of the few areas out there that have a sort of high risk, high reward potential, and investors have been chasing yield. And so if interest rates go up, there'll be other places to look.
Adam, what about the ability of companies such as Uber or indeed Palantir, companies that have raised billions of dollars in investment money? What's the possibility that an interest rate increase could make it more difficult for them to add even more money to their balance sheet?
It's an open-ended question. I mean, there's a few things that could happen here. One is what it means for some of these later stage companies that need to raise more money. I think there's a different tiers of these companies, Uber and Palantir, which are a bit more established and have proven themselves to have a business model that generates a lot of revenue. I think some of those companies are probably in a better position to some of those who are in a tier below, where you see companies that have been able to get billion-dollar valuations where they don't really have any revenue yet, and it's all based on sort of their price to perfection, so to speak. This idea that if their business models work out perfectly, that they'll be able to get these. And so if interest rates are increased and you see the market shake out, it could be harder to raise more money. And if there's volatility in the stock market, it could make it harder for companies to go public, which has already been the case even in the current situation.
Adam, if that continues, harder to raise money, harder to go public, would that make it better for investors who want to seed some of these startups because fewer investors, if hedge funds or mutual funds step aside, that means you might get a better deal from the company?
I think there are a lot of venture capitalists who, while they're not cheerleading the idea of some sort of bubble burst, they do like the idea of some of these valuations sort of coming back to earth a little bit. The introduction of money from hedge funds and mutual funds has really sent valuations skyrocketing, and venture capitalists who are used to getting a better deal have had to really pay up to get into some of these high-profile companies. So there are certainly some investors who would welcome a certain kind of shakeout.
Adam, are there companies in a specific area of technology that are most vulnerable?
In my reporting and talking to some different investors, the ones that seem to be the most vulnerable are some of those consumer-facing late-stage companies. I mean, investors are afraid to name names, but there are over 100 startups that now have over $1 billion valuations. And one venture capitalist talked to said they've been given the name unicorns, but he said that name might prove apt since unicorns don't really exist. And so this is just one of event that could be a test for the durability of this moment for Silicon Valley, where the money has been very easy for a lot of these startups. And so this will be a test, and there'll be others down the line.